What happened to the stock market at the start of the year? As we ushered in the new year, the stock market was a flurry of activity. The session wasn't an easy one, as Federal Reserve Chair Jerome Powell threw a curveball, dampening hopes of an early interest rate cut. Investors were left grappling with the unexpected news. Yet despite the challenging circumstances, stocks put up a strong front, showing resilience throughout January. Despite a challenging session, stocks held up impressively throughout January. Investors were optimistic for a steady interest rate, but were they right? The recent meeting of the Federal Reserve seemed to confirm this, maintaining the status quo without any hint of tightening monetary policy. However, Federal Reserve Chair Jerome Powell threw a curveball. By highlighting persistent inflation concerns beyond the Fed's 2% target, he effectively dashed hopes for a March rate cut. This unexpected move has triggered a delay in the much-anticipated monetary easing, shaking the confidence of investors. A delay in monetary easing, much anticipated by the market, looms ahead. How did the major stock indices react to these developments? The stock market indices were not left unaffected. The Nasdaq took a deep plunge, dropping by 2.2%, while the S&P 500 also retracted, losing 1.6%. This suggests a volatile week on the horizon. The Dow Jones Industrial Average also slid, but the dip was more modest. The overall downward trend across these indices highlights the lingering uncertainty that continues to shape the stock market. The pervasive uncertainty in the stock market underlines a potentially tumultuous week ahead. Despite recent developments, are there any opportunities for investors? Well, let's see what the experts are saying. Financial gurus like Dave Bartosiak are viewing this downswing in stocks as a potential window of opportunity. Here's a twist. Treasury note yields have actually eased following the tumultuous trading sessions, contradicting the anticipated reaction. This suggests a silver lining amidst the clouded market, a still favorable environment for stock investments. So despite the gloom, a favorable environment for stock investment persists. What insights do we gain from the financial disclosures from tech giants? Let's dive in. Alphabet and Microsoft, two tech titans, have recently released their financial reports. Both surpassed earnings projections, a positive sign of robust growth. However, they faced a backlash from the market. Alphabet's advertising revenue shortfall was a particular point of contention, causing its stocks to tumble. These financial performances are pivotal, often setting the pace for other tech stocks. These financial disclosures sent ripples through the market, causing stocks to tumble. Despite recent sell-offs, how did stocks perform in January? The opening month of 2024 was, without a doubt, a roller coaster ride in the stock market. Yet it wasn't all doom and gloom. Major indices like the S&P, Dow, and Nasdaq managed to secure commendable gains. Even with the decline in the last session, these key players held their ground. They demonstrated that even amidst turbulence, growth is attainable. However, January's robust start for stocks was somewhat marred by the latest sell-offs. What can we expect from the stock market in February? Brace yourselves for a riveting financial discourse as tech giants Apple, Amazon, and Meta platforms gear up to release their earnings reports. With the market teetering on the edge, these disclosures will either bolster confidence or further fuel uncertainties. Their performance might not just impact their individual stock trajectories, but could potentially sway the broader market trend. So, all eyes are on these tech titans, as they hold the key to the unfolding narrative. These earnings reports will set the tone for February's stock market narrative. How is the labor market influencing the stock market, you might wonder? Well, labor market indicators, especially the forthcoming non-farm payrolls reports, are pivotal in shaping stock market trends. These reports provide a snapshot of the economy's health, which invariably influences investor sentiment and market dynamics. Interestingly, we're seeing a bit of a cooling trend in the early ADP employment figures. Is this a cause for concern or a temporary blip on the radar? Only time will tell. The cooling trend in early ADP employment figures could reflect broader economic dynamics at play. In conclusion, how did stocks perform this January and what lies ahead? Well, despite some turbulence, the stock market proved its resilience in January. Major indices held their ground, posting commendable gains. As we step into February, the financial narrative is expected to be dynamic. It's set to be influenced by earnings reports from tech titans like Apple, Amazon, and Meta platforms, as well as key economic indicators such as non-farm payrolls. Major economic reports and tech earnings will likely serve as critical waypoints for investors steering through the stock market's capricious waters in February. As we wrap up our detailed analysis of the stock market's performance in January 2024, we want to extend our gratitude for your time and attention. If you found this video insightful and valuable, we would be thrilled if you could support our channel. You can do this by hitting that like button, sharing this video with your friends and colleagues, and subscribing to our YouTube channel for more in-depth discussions and insights into the world of stocks. Don't forget to hit the notification bell so you won't miss any of our future updates. As we continue to journey through 2024, we promise to keep bringing you timely and detailed updates on the stock market. Stay tuned for more, and remember, the key to successful investing is staying informed. Happy investing.